Okay, everybody, this is going to be quite a video. I want to put a lot of things together for you. You got to understand what you are looking at. Most people have not the slightest clue, but we're going to talk about that here. So, yeah, this is my post-market wrap-up on this historic day. History was made again today, Thursday, March 5th, 2020. History was made, but not in a good way. The U.S. 10-year yield again hit an all-time record low, and you can see the effect on the stock market. We lost nearly 1,000 points. What I want you to take away right here, right at the beginning, I'm going to say it. We are in a debt saturation meltdown. A debt saturation meltdown. Today, believe it or not, on CNBC, they had a woman from Morgan Stanley come out and explain that the problem here is debt. It's incredible. I can't believe that she was allowed to say this on CNBC. They kind of rushed her off right after saying that because, again, these mainstream media outlets are garbage. They need to distract you. Of course, they had their share of people out here explaining that now you should be buying stocks, but they're not explaining to you what we're witnessing in the debt market. We all knew for how long that at one point the issue here with debt saturation was going to rear its ugly head. And you got calls for more debt, quantitative easing, negative rates. You got to be kidding me. You've got to be kidding me. From an admitted real estate person, this is Donald Trump trying to explain to you that to fix this issue, we need more debt, we need quantitative easing, we need negative rates. Again, the man has admitted he does not understand the stock market. So if he doesn't understand the stock market, how can he have even the slightest inkling about central banking? But again, it's a bigger picture. You know that. It's all about the final solution. Issue in more debt. Now, what we're going to get here, even though we are debt saturated, and you can see this in the collapsing yield curve, the history being made by the 10-year yield continuing to crater, sucking down the stock market with it. So explain, how are lower rates going to help when the entire yield curve is dropping? Oh, that's going to really help President Trump. Hello? Up your meds. Maybe you need a higher dose. Seriously. And it's not just the president. I'm picking on him because he's been screaming from rooftops just over the last week. Negative rates. The Fed needs to do more. He was euphoric when the Fed cut 50 basis points and then the stock market went higher, only to reverse dramatically. You see, he doesn't understand it. Either he doesn't understand it or he's deliberately trying to fleece you. I feel so bad for the average guy or the average girl, my window's over here, that is being hand-led to the slaughter. And it's the same story over and over again. The government and the Fed is the government, are serial bubble blowers. They just transfer wealth from the masses right up to the 1%. Masses 1%, masses 1%, over and over and over again. Not everyone loses money, people, on a day like today. I made money today. My Lions, I'm sure most of them made money today. This is a wealth transfer. That's all this is on an epic scale. And debt is not going to fix the problem. The fact, and it should make sense to you, that we are watching the 10-year yield crater and stocks crater along with it should explain to you that debt is not the problem. The problem is we are debt saturated and we're getting calls for more debt. You can't fix this with more debt. I'm sorry. So the president can scream all he wants. The Federal Reserve can pump this all they want to. We're getting another rate cut. There is no doubt about it. A series of rate cuts are coming. And all it's going to do is add fuel to the fire. People, let me explain this to you. What you are witnessing over the last several days is a wealth transfer. A lot of people lost a lot of money, and some people, me being one of them, made money. This is going to progress to a much larger degree. It's the same scenario over and over and over again. You need to be in suppressed assets right here and right now. Again, what do we know for a 100% fact that is indisputable is going to happen, not just with the Federal Reserve, but central banks around the world? Exactly. They're going to inflate. They're going to cut rates. They're going to print, all in an attempt to prop up a dead economy. The world economy is in free fall. The United States economy is in free fall, and the president admits it. You know, sometimes you got to read between the lines. When you have a president, okay, in this case, calling for quantitative easing, calling for negative rates and lower rates, well, when was the last time we saw that? During the last financial meltdown. How about before that? How about never? How about never? You don't see it. The president is explaining to you, maybe in a roundabout way, maybe he's a good guy, that we are in meltdown and you need to protect yourself. I don't know. I'm just making this stuff up here as I go along with this segment. But the fact of the matter is, the president is well aware that our economy is in meltdown. You will be fed the fake numbers. They're going to tell you about unemployment. But the fact is, again, we have less people working today than during 2010 in the heart of the last meltdown. The labor force participation rate is lower today. You can't know that, but you can do a little research on your own. Look it up for yourself. Labor force participation rate, 2010. Labor force participation rate today. You tell me what's lower. You tell me if I'm wrong. Okay, I know I'm not wrong because I just looked at it again. But you do what you want to. But the fact of the matter is, we are debt saturated. We've hit the moment. I mean, it's incredible. We all knew it was going to come, but the end game here is very simple. And they won't stop. This is why we're going to hear calls for quantitative easing, calls for negative rates, and the Fed will comply. We got this emergency rate cut. We're getting more. The Fed is going to cut, print. That's what they're going to do. Now, let me put another perspective on this whole thing for you. Every single financial channel, go on Fox Business, Reuters, CNBC, Market Watch, watch them on their broadcast. Everything we're seeing, everything, according to them, because they all have the same script, is because of the coronavirus. It has nothing with a hyperinflated stock market on the back of the mother bubble of them all, which is the debt bubble. A stock market which is massively so overvalued that we're in extreme bubble territory. We have had malinvestments across the spectrum of asset classes for years. I've been outlining it for you blow by blow here, year after year. But no, what we're seeing now, the cratering yield curve, the market meltdown, the rising of the prices of cryptocurrencies, gold and silver. No, it's all because of the coronavirus. Gold and silver are going higher because of the coronavirus. Cryptocurrencies, coronavirus. The debt market is cratering. Coronavirus. Stocks are selling off. Coronavirus. It's all the coronavirus, according to the mainstream media garbage shills who have been paid, who are paid to distract you, just like a lot of these YouTube channels are. Believe me, there are paid YouTube channels here. They tried to get me to do it. I will not do it. I do not need the money. I don't want the money. All these other retards out there pushing some other agenda, they're being paid to do it. You know exactly who I'm talking about. And there's a lot more than one. There's several. Let's put that aside for now. So the distraction and the deflection, coronavirus. Look, I am not saying again that the coronavirus isn't real. It's a real thing. It exists, okay? There are 8 billion people living in the world. And what do we got, 4,000 deaths? It's not even a blip on a radar screen. Not even a blip. You wouldn't even show up. 100,000 cases, big freaking deal. We got 8 billion people on this planet, but it's a distraction. Yeah, it's a real thing, but you must focus. If they can make you afraid of one thing, they control you. You become a slave. Don't look here, look over here. People, what we're seeing now is not 100%, according to the mainstream media financial channels. Everything is about the coronavirus. Do you believe that's true? Do you believe that everything you're seeing right now in the markets is coronavirus? If you said no, not everything, well then you're admitting that you're being misled. Okay? I will not mislead you. I am not afraid of a damn thing. I'm afraid of the wrath of God. That's it. I'm not afraid of anything else on this planet Earth. That's the truth. But look, people, this is extraordinary what we are seeing here. And all this is a wealth transfer. It's a wealth transfer effect that has already begun. Most people today, over the last few weeks, have lost trillions of dollars in net worth. And it's been transferred. It's been transferred to people like me. It's been transferred to the Wall Street banks. It's been transferred to the hedge funds. And this is nothing. Let me explain this to you. I look at charts all day. I look at short-term charts. I look at long-term charts. I look at everything you can think about and things you probably wouldn't even believe when it comes to this market. I look at what's going on in other parts of the world, currencies, economies. I mean, I'm immersed in this. So listen to what I'm saying here. My longer-term charts are saying right here and right now that this is just the beginning. We are more than likely, if they cannot get the bond market to remain stable, and it's very unstable right now, we haven't seen anything yet to a market meltdown, which is just going to mean you're going to lose money. I'm going to make money. My lions are going to make money. The Wall Street banks are going to make money. The hedge funds are going to make money. The upper echelon of society, they're going to be laughing at you because that's all this is. It's a setup. The government, the Fed, they work together to deliberately inflate bubbles and then deflate these bubbles. These bubbles deflate a lot faster than they inflate, and that's why people get caught off guard. It's designed to do that, but not you. Not you. I told you 2 Fridays ago, before the meltdown, I pulled all my cash out of this market. I was first. The first financial guy that I know of who exists on the planet. Truth. That pulled his cash out of this market first. And you out there all had the biggest tip in the face of the earth. I probably saved people untold amounts of capital if you followed my advice and just did what I said I did. But we're not done, people. If they do not stabilize the bond market, we haven't seen anything yet. Anything at all. And I'll tell you something else. Crude oil, first of all, as you know, crude oil is massively overvalued. The real price, the fair price for crude oil is between $25 and $27 a barrel, according to my calculations. Well, we know it's all propped up and it's all fake. Crude oil is in free fall as well. If crude continues to drop, the stock market's going with it as well. So we have a perfect storm here, people. We have a yield curve cratering. At the same time, we have calls for quantitative easing, calls for lower rates, a Federal Reserve more than willing to comply. So what's the end game? The end game is very simple. There have been throngs of people brainwashed that the Fed is going to be blamed for when this melts down. No, they picked their scapegoat. The scapegoat is now the coronavirus. Let me explain this to you about the Federal Reserve. They've been around longer than most of you are alive. They have every angle covered that you can think about and possibly imagine. They have black ops that goes on right under your nose. The enforcement arm of the Federal Reserve is the United States military. You don't believe me? Maybe you should look into the petrodollar and understand how it works. That the United States military is mandated to protect the oil of OPEC nations. This is how the petrodollar exists. The U.S. dollar is the reserve currency, and the Federal Reserve controls it. You understand? I hope you do. So the fake narrative that has been going on is the Fed's going to be blamed. Trump is going to win. Gold standard. Trump is going to win the election. That's not what I'm talking about. I mean, with regard to some kind of a new plan. No. They've picked their scapegoat. It was deliberate. This was deliberate. The coronavirus was deliberately dispersed. Deliberately dispersed. I am convinced of that. Do you know why? I have thousands of people, tens of thousands from all over the world who write to me and send me things. I have seen what I would believe is clear proof that this was deliberately dispersed at this time as a distraction. Look at the coronavirus. Look at what it's doing. It's affecting every aspect of this market. Gold, silver, platinum, palladium, oil, stocks, the debt market. It's all the coronavirus. Don't you know that? Well, how would you know that it is? Look at the mainstream financial channels. It's all the coronavirus. It has nothing to do with a debt bubble. It has nothing to do with a stock market bubble. It has nothing to do with malinvestments across the board. You got to be kidding me. Are you buying this? Some people are still buying it. But it's not the Fed who's going to be blamed for anything. This gives the Fed, the coronavirus gives the Fed the green light to print. We just found out that Senate passed a bill to fund emergency coronavirus. Where's that cash coming from? Do we have it? No. It's got to come from the Federal Reserve. We have to borrow it. You're borrowing, and this is just the first installment. We are going to start bailing out other industries as well. It's already being spoken about. The travel industry, airlines, they're all expecting bailouts. So you know who's providing that cash? You are. Public bailouts. You think that's fair? You think this is not socialism? It absolutely is, and that is the end game here as well, too. Okay, it doesn't matter who sits behind the Resolute desk, nor does it matter what comes out of their freaking pie hole. You lose. You lose. We all lose, okay? There's not enough of us to create a revolution, which is what we need. So, in summary, debt market is cratering, is completely unstable. The stock market is following. If they do not do something with this debt market, you can expect what you've just witnessed over the past week and a half to get monumentally worse. The scapegoat is the coronavirus. The coronavirus is going to be blamed for everything. The Fed is going to print and add digits to a screen. That's it. It's not the Fed who's the fall guy here. It's the coronavirus. And let me tell you this too, like I just said, this was deliberate. This is a deliberate thing, and they must keep you deflected. They must keep you distracted. They control your mind by making you afraid of something. You want to be afraid? Be afraid of yourself if you're buying all this. All right, I'm out of here. I hope this makes sense to you, what I've covered here. Please share the video. Get it out there. See you in the morning.